Hello and welcome to Business Morning. It's another trading day right here in Lagos, Nigeria, and definitely the markets are buzzing right now. But let's check on the star commodity. At this point, we're seeing oil prices are back on the decline, shedding over $1 in today's session as markets react to potential, diplomatic progress between the United States and Iran. Investors are betting that renewed peace talks could pave the way for increased crude supply from the Middle East, easing recent, supply concerns. And there you have it, just like a replay of what happened last week in the markets. And we're seeing Brent down 0.56% after rising in the Monday session about 5%. We're seeing $95.01 per barrel. WTI crude also down 0.55%. And this is the supply for May. Yes, May, $89.12 per barrel, 0.55% lower. Definitely we'll keep, tracking these contracts. We'll see if this continues. Because last week, Brent fell about 5%. That's for the whole trading week. WTI was down bigger, about 12% last week. Let's see if that continues this week. And that's good for us at the pumps, if that continues. Meanwhile, I will see Nigeria's oil paradox is coming into sharper focus. Despite being one of Africa's top crude producers, the country imported over 61 million barrels of crude from the United States between January 2024 and early 2026, according to new data. This growing reliance on foreign feedstock comes even as Nigeria exported more than 300 million barrels in 2025, with an additional 55 million barrels shipped in just the first 2 months of 2026. The trend raises questions about refining capacity, supply chain gaps, and the efficiency of the domestic oil sector. So that's recent data there. Let's get a check on how your money performed yesterday. Nigeria's stock market is pushing into record territory more, with the oil share index gaining 0.44% in yesterday's trade, closing above the 218,000 point level, and we're sitting comfortably 140 trillion, and that's for the market cap. The rally lifted the total market capitalization and major sectors, that we track, signaling strong investor confidence despite a slowdown in trading activity compared to the previous trading day. Volume, 983.95 million, valued about 50.77 billion naira, and we see deals 76,410. That's for yesterday, showing that volume dropped. And in looking at other parts of the market, we see NACO, that led the gainers chart up a full 10%. Union Deacon, that's 10% higher. Fidelity Bank also registering there 9.98% up. We see for the top losers, Living Trust, that dipped 10% yesterday. I see a pullback with Stanbic closing 169 naira 70 kobo, and Transpower down 9.97%. Top trades, Access Core, that's been on a tear recently, 91.65 million traded. It also gained yesterday. First Hold Co. So we're seeing the banks there, financial services, topping the trades, that's by volume yesterday. Meanwhile, it's a strong week for investor returns on the Nigerian market, with major corporates set to reward shareholders. We have United Capital PLC. They're leading the pack this week, paying a final dividend of 12.6 billion naira from its full year 2025 results. Can put that up for me, offering an attractive yield of 6.13%. Meanwhile, Guinness Nigeria PLC set to pay an interim dividend of 4.38 billion naira for its first quarter 2026 performance, bringing its annual yield to about 0.40%. The payouts underscore continued corporate profitability and provide a boost to investor sentiment in the equities market. The investors love their dividends at this point. So we have the latest for this week, United Capital and Guinness Nigeria. All right, see, Nigeria is taking a major step towards a more secure and integrated digital economy. As the Central Bank of Nigeria and the Nigerian Communications Commission, they've signed a sweeping new agreement. The MOU aims to strengthen fraud controls, boost consumer protection, and deepen collaboration between the financial and telecommunications sector. CBN Governor Salah Cardoso says the move reflects the growing reality that Nigerians increasingly rely on digital platforms to save, pay, and do business. The partnership signals a critical shift towards a safer and more connected digital ecosystem. We see the global economy limped into 2026 spring meetings in Washington with a growth cut to 4.1%, financial conditions tight, and the Middle East war driving up oil, fertilizer, and shipping costs. Nigeria was at the table with Finance Minister, Mr. Wale Edun, and the CBN Governor, Mr. Olayemi Cardoso, leading a packed schedule from the G24 meeting to the African Monetary Institute engagement. Our correspondent, Sarah Chimiru, who covered the spring meeting, gives a roundup of the key sessions during the meetings. Take a listen.
The World Economic Outlook set the tone for the 2026 IMF World Bank spring meetings as global growth downgraded, with energy importers hardest hit. The fund warned that if the Middle East crisis persists, world growth could slide towards 2%.
The impact on the global economy is already large. Even if the conflict is short-lived, extensive infrastructure damage and supply chain disruptions are pushing prices up and slowing global growth down.
At the Global Policy Agenda sessions, finance chiefs debated how to coordinate monetary policy, contain inflation, and keep trade open amid fragmentation. The IMF urged countries to maintain policy buffers and avoid premature easing.
Policymakers will need to carry out structural reforms to lift productivity and growth. A strong economy is the best buffer.
The fiscal monitor laid bare the debt challenge. It showed African countries will pay $90 billion in external debt this year, while borrowing at rates more than twice those of advanced economies. At the African Department briefing, a report by the International Monetary Fund on Sub-Saharan Africa shows its economy grew to 4.5% in 2025, its fastest in a decade. Nigeria and Ethiopia are set as examples where exchange rate reforms, subsidy cuts, and tighter monetary policy delivered results. But there's a warning: the global shock is now testing those gains.
We have accordingly revised our growth forecast down to 4.3% in 2026, some 0.3 percentage points below our pre-war projection, and are expecting median inflation to rise to around 5% by the end of the year.
Nigeria chaired the G24 meeting this year. The Minister of Finance commends members for their role in improving their economies, but stresses improved performance in the coming days.
We are at the heart of multilateral institutions, and they are looking keenly at the response of those institutions to helping, in particular, the countries hardest hit, the countries less resilient and able to cope, and they fall largely and squarely within a quadrant where the African countries are the majority by far.
We already have. At the African Monetary Institute event, Nigeria reaffirmed Abuja will host the institute, a step towards an African central bank, trade and economic cooperation.
We've all agreed about the need for this. I think the case has been settled. Across the continent, there is a vast agreement on the need for us to come together. We might differ on a few of the details, which hopefully through the intergovernmental process.
The Minister of Industry, Trade and Investment attended sessions on AFCFTA and global trade policy, pushing for support to de-risk investment into Nigeria's manufacturing and agro-processing sectors, just as she recounts the gains of the government in key policies to boost job creation.
In 2025, released 4 legislations on tax. And so now, particularly leveraging for small and medium-sized enterprises, before we had exempted 25 million naira turnover. Now we've increased that to 100 million. We've also exempted for VAT a threshold of businesses, just to allow for that transparency. There's one development levy, they're exempt from that as well. And so small businesses have that opportunity to balance out as they scale.
At the close of events at the spring meeting, Both the Minister of Finance and the Central Bank Governor had a sit-down with the press.
Nigeria's experience indicates that spillover effects have been relatively contained, reflecting positive reform outcomes.
In Nigeria, it is the markets that regulated the shock. So it was the pricing mechanism, pricing of petroleum products, pricing of foreign exchange or action or transactions in that market.
According to the government, Nigeria's spillovers have been relatively contained thanks to reforms. Officials cite FX stability, stronger reserves, and a 4.6 trillion naira recapitalization, as well as the provision of safety nets, as some of its top priorities.
The 2026 spring meetings of the World Bank and the International Monetary Fund is over. From various sessions on how to mitigate the impact of the Middle East crisis on domestic economies, to sessions on reducing inflation and debt financing, to financial inclusion and reducing poverty levels, the message is clear. Government institutions and the private sector must collaborate in the interest of the people. The conversation will then move to Bangkok, Thailand in October 2026 and will provide a time to assess recommendations shared here. From Washington, D.C., Sarah Chimugu, Channels Television News.
All right, thanks, Sarah. That was a wrap-up of what played out last week at the IMF World Bank meetings. Definitely looking forward to the next one. All right, to our first conversation now. It's a pivotal moment for Nigeria's economy as major shifts emerge across both the oil and agricultural sectors. The Dangote refinery is now moving upstream, producing its own crude, raising fresh questions about competition, pricing power, and the broader structure of Nigeria's oil industry, especially alongside the NNPC Limited. At the same time, the start of the planting season is once again putting pressure on food prices, highlighting persistent challenges around supply gaps, storage, and distribution. Let's unpack all of this now in the commodities segment. Now, joining me is Dr. Ifeoma Nwokolo. She's the Assistant Vice President and Head of Economic Research at Financial Derivatives Company. Great to have you in the show. Good morning.
Good morning, Larry. Thank you for having me.
Yeah, so much to unpack. I guess we can almost call it Dangote season at this point. But with Dangote now producing, crude from his own upstream assets, how significant is this shift, towards a full vertical integration, in Nigeria's oil sector? And what does it mean for, pricing power, competition, especially, relative to the NNPC Limited?
Well, I'll say that this is what I call a significant milestone to Dangote and also to the oil and gas sector. So Dangote has commenced the production of oil, that's drilling of oil from his upstream oil assets. And this particular oil block is expected to produce about 15,000 barrels per day in the next few weeks. And also coupled with that, there's also a plan to a kind of shipping expansion in order to help the company to integrate. So I would say that this will help in what we call a downstream integration. And not only downstream, is a vertical downstream integration in that sense. Aside being a downstream integration, there's also a full, what I call value chain integration in this aspect. And what is it going to do? If we look at it from a macroeconomic perspective, we are going to see that this particular move or shift in the sector is going to a kind of help Nigeria to be less dependent on PMS or in refined products going forward. And also, if that happens, it's going to have a kind of implication on the FX market, because the pressure on FX market is going to reduce if we are not depending on exportation of these commodities from other refined commodities from other countries. Another significant macroeconomic implication is that is going to increase employment. Of course, we are no longer going to be sending out our employment to other countries, because once you begin to import, make your country dependent on importation from importation from other countries, you are sending out your employment to other countries while you are creating unemployment within. So I think this will also, there will be a shift in the employment fund. Then also, if you look at this energy security, I think we're going to have a kind of energy security. We're going to have more of domestic supply, sure, because if you look at what happened in the couple of weeks now, the Iran and US and conflict, you see that if Nigeria does not have this domestic supply, I tell you that the heat would have been much. So the issue of scarcity, I said the issue of scarcity is gone and gone forever, yes, because even though there's global crisis, Nigeria never felt it. We still had domestic supply. So looking at that, supply will be certain.
Okay.
Then the NNPC too has a backward vertical integration. So it's like Dangote is more or less at the same level, if I put it that way. So I think the supply risk of whether is getting supply from NNPC or not, I think that will be reduced. The supply risk will be reduced for Dangote because he is now producing, yes, he is now have the access to produce from his upstream oil assets, I think.
Right. So expectations is about 15,000 barrels per day. So I'm just trying to imagine here, let's imagine that he can get up to maybe 400,000 barrels per day or 200,000 barrels per day, just higher than this level. Does it mean that when we have issues like, with the Strait of Hormuz and we're seeing oil prices rising, he is able to produce his own oil? I guess he shouldn't be worried about pricing?
I can't guarantee prices because our PMS price is dependent on 3 factors, which is the global oil price, and secondly is the logistic cost, and the third one is your production cost. So I will only guarantee supply, which we have seen during this couple of weeks. Supply have remained. There had not been scarcity. But talking of price,
if he's producing his own oil, he shouldn't care about oil prices, feeding his own refinery. That's if he can get up to maybe 200,000 barrels per day or more.
Oil prices are determined by global oil prices all over the world.
Even though he's producing his own oil?
Even though he produces his own oil. I think the only difference we are going to see may be the premium that is added to it. Now he's producing on his own. So I think that premium will be off it and other add-ons. But if you're talking of global oil price, it's still going to follow the global oil price. So I think where we are going to have some little benefit will be from that premium that is paying. I think you'll be reduced because now you are the one producing from your upstream oil assets. That premium will be off it, but I'm not sure. I can't guarantee the price, but what I know is that we're going to have energy security while we're going to have more supply, domestic supply.
Right. Yeah, I did mention that it's also, we can call this Dangote season at this point. We're seeing the Nigeria stock market, it's been on fire for the longest time now. I can't even remember a bearish moment, in Nigeria stock market. And there's word on the street that's on, the expected Dangote refinery listing. How are you seeing that?
Well, I would say that the Nigerian equity markets has extended its bullish run in April. We see it hitting 140 trillion naira in April. One of the factors that is driving this is basically the Q1 earnings that we saw. I think a lot of people saw the Q1 earnings majorly coming from the banking sector and the recapitalization issue. So this is driving. I think I saw a write-up where a woman is discussing how she got a dividend of 4 million naira from a particular bank. I think that is the push in that market. Also, the Dangote refinery listing could be a factor because it's creating what we call a halo effect. A halo effect is a sentimental spillover. So investors have that sentiment. It's going to have a spillover to other sectors, so that there's this sentiment that, oh, Dangote refinery is coming in, so everybody is at alert, the stock market is booming because they know that a particular sector is coming. And Dangote refinery will be listed sooner or later, because very soon there's going to be a town hall meeting concerning this Dangote listing. So it's also a factor. Another factor is that once there is increased uncertainty, people tend to invest their money. You invest because you don't know what the future holds. So you invest your money waiting for your returns. Then also the issue of interest rate is another thing, because there has been this speculation that inflation is going to continue rising and interest rate might spike and all the rest. If it does, I think that we are going to begin to see a bearish shift in that market. But for now, for April, we are seeing that the stock market has continued his bullish run into April, and we expect more of it. But the question is, could this be a bubble building, which I don't really know. But
right. I guess most investors, analysts are wondering where the top will be for the market at this point. Everyone's asking now. The NGX is getting so much attention. I'm getting calls, people asking me, when is it Dangote refinery listing? I want to buy, and all of that. So much attention right now. I just hope the bubble is not really swollen, at this point. But let's look at the global oil market now. As I expected, oil prices are down Tuesday, just like the same playbook we had last week. Do you think this is a trend we're having now? Weekly losses. We had a weekly loss last week for Brent and WTI. Are you expecting that this week?
Yeah, what we saw last week was, I think the Straits of Hormuz was partially opened. I say it was not temporarily, it was opened because of the Israel and Lebanon peace talk. And we saw a shift, a dramatic decline in oil price. But even though we saw that shift, I don't think it's sustainable, because yesterday, it traded about lesser yesterday, but this morning again dropped to about 94 and picked up again to 97. So we are going to continue to see this volatility, because the shift that we are seeing, or the spike that we are seeing in price, is not because of fundamental issues. It's not fundamentally driven. It's fear-driven, because traders are beginning to price in worst-case scenario. What is the worst-case scenario? Another escalation, or, so there is a lot of uncertainty. So we may only see if there is a ceasefire talk. If there is a ceasefire talk, I tell you, there will be a sharp decline, that oil price can even go as low as $70 per barrel. But because the uncertainty is still very high, so the market is pricing in a worst-case scenario. Worst-case scenario, that's why you see oil price hovering between 95, 97, 95, 97. So the issue of US and Iran, the crisis is still ongoing. Yes, I know that if there's a peace talk, I know we'll see a sudden decline. But if otherwise, the prices may go as high as $100 per barrel again.
Definitely, all eyes on the Strait of Hormuz at this point. Forgot to track how many ships have made it through so far, but yesterday I believe it was around 4 ships. Earlier it was 1 ship, then it increased to 4. I'll check how many have been able to make it through so far. But yesterday, interestingly, I tried to buy plantain yesterday, and I normally buy a full bunch at about 6,000 naira, but I see there's an increase. That's a full big one, big bunch.
Yeah.
But yesterday was about 16K or 15K. That's what they're asking for. What's happening there?
It's crazy. So what we are seeing happening in the commodity market, you know that once there's an energy price surge, you don't see the impact on commodity prices immediately. And there's usually a lag. And that is because people that have some inventory, yes, you have your old inventories, you are still selling on your own inventory. Where we begin to see it is when people are done with their own old inventories and they are beginning to buy new inventory. Aside the oil price surge, let's not forget that seasonalities has begun to kick in. This is the period where we have the planting season. This is not the season for planting. Yes, the season for planting is usually August, September, but now this is off-peak period for plantain and so many other commodities. If you look at the commodity slides that we have here, you see that most prices are flat, yes, and then some are beginning to increase. The lag effect has begun to kick in. You see prices of tomatoes and pepper high, other ones are flat. By this time, in the next 2-3 weeks, you may see all of these prices that are looking flat begin to tilt upwards because of planting season effect, and also the lag effect will wane. So once the lag effect wanes, you begin to see these prices taking their normal directions, whether upward or maybe marginally. But with what we see now, we know that prices will definitely tick up in the next few weeks following seasonalities and them.
Okay, yeah, because it's quite interesting. We keep talking about, planting season, leading to higher prices for most of these domestic commodities and food prices. But is there a way we can hedge against that? What can be done? Is it storage? What can we do so that planting season doesn't always lead to higher prices?
Yes, planting season is crucial. And do we have the mechanism to store these things? That's another question. If you don't have the mechanism to store these things, the problem will continue. So for countries that have mechanisms to store these things, you know that planting season simply means that at that season, there's no surge in supply. Supply has declined. So once supply declines, you know what it means, lad, and your demand is high. Of course, prices will go up. So if we have the technology or the mechanism to store some of these commodities when we have them in excess, like some people do. If you have a deep freezer, when it's season for tomatoes and pepper, you can buy baskets and store them in your freezer. Then you cannot use them but that is for an individual in a micro level. But at the macro level, how do we do this? If we have the mechanism to do this, fine. It will help to cut costs. But if we don't have the mechanism to do this, we'll continue to face the same cycle, because it's going to be a cycle. Once there's planting season, there is scarcity, there is constrained supply of commodities. And once there's constrained supply of commodities, prices increases. So that's sacrosanct.
Okay.
I think.
All right. After the show, I'll go and start my own planting at this point. Hope it's not too late. Thank you so much. Always great having a conversation with you, Dr. Ifeoma Awokolo, Assistant Vice President, Head of Economic Research, Financial Derivatives Company. Thank you, ma'am.
Thank you for having me, Ladi.
All right, we'll take a break now. When we come back, we'll talk about youth unemployment. How's it going in Nigeria? That's in a moment. Do stay with us. Welcome back. Well, the conversation around youth empowerment in Africa is no longer just about potential, it's about urgency. Across countries like Nigeria, millions of young people are entering the workforce every year, bringing energy, creativity, and ambition. Yet, for many, the pathway from talent to tangible opportunity, that remains unclear. Major urban hubs, we continue to see a widening gap between education and economic outcomes, raising important questions about whether our systems are truly designed to support the next generation. According to the previous methodology, about 33% of Nigerians were effectively jobless. We see the official youth unemployment level about 6.5%, according to official data. Youth unemployment estimated at 5.3% in 2025. And we see a youth population of 60 to 70% of Nigerians under 30. informal employment, that's about 93% of jobs. Joining me now to unpack this, well, Samuel Kalin Zide is the founder, Project New Nigeria. Joins me right here in the studio. It's great to have you, sir. Good morning.
Thank you, Ladi. Pleasure being here with you today.
Great to have you. So, it's quite interesting, leaving the house in the morning, you see a lot of activity. See people at the bus stop, they're heading somewhere. It's early in the morning, and I guess it's to work. You see the guys, at the bus stops, collecting money from, bus drivers, and some collecting money from, truck drivers that are carrying goods. So people look busy, but it doesn't seem to cut it, at this point. What do you think is the paradox here?
Good morning. Thank you again for having me. I think the economy is the biggest problem at the moment. As you say, people wake up, go about their living, so you can't say people are lazy, It's just not enough at the moment. Something needs to be done, I don't know if it's having more relevant skills or changing the way things are done, but something definitely needs to be done because Nigerians are not lazy and they are working. And every day people wake up, try to make ends meet, but it's just not enough. So I think we need to do something different.
Right. Well, what's the relationship, between what we're seeing right now and, because we had a huge currency devaluation, coming from where we were previously, getting to 1,400 level to the dollar. Obviously, that's caused a big impact, increasing poverty levels at this point. And now there's also a trend. You go to public places, everyone's asking for a tip at this point. Even policemen on the street, everybody's looking for a tip, right now. So they're being paid, but it seems it's not enough. And now you have a lot of people young people coming into the labor force. Are they not getting the right skills? What's happening?
I think you mentioned the devaluation of the Naira. No doubt that has reduced significantly the purchasing power of everyone. So, and I don't think the review that has been done on wages and all is enough just yet. So you have someone who was earning, say, 50,000 Naira before the devaluation about 3 years ago, and currently he's on about 60,000. But you have things have skyrocketed over 200%. So it's never going to be enough, and that is why we have everything, or we see everything we're seeing. So I think there needs to be better review, and then we hope for the economy to bounce back and for things to get back to the way they were before all of this.
Right, and I want to believe the gig economy is helping, at this point. Now we have a lot of people that are, driving, using the ride-hailing services. There are drivers there. You have delivery guys, all over the place, delivering for different companies. But do you think the gig economy is helping somewhat?
Oh, yes, it is. I mean, with the devaluation of the Naira and the way the economy is now, we are seeing things that we haven't seen before. So Nigerians have become more innovative,
Nigerians are hustlers.
Yeah, Nigerians are real hustlers, making money in ways they weren't used to before. They have to survive. So yes, this is helping, and believe me, I've seen ways Nigerians have come up with innovative ways to make money that even I am shocked, So I think there's light at the end of the tunnel.
Right. So for you, looking at it from the government side of things, and also let's look at what we're teaching our youths in school. Now there's so much talk about artificial intelligence. We're seeing huge companies spending so much on data centers, artificial intelligence and all of that. Do you think this curriculum is helping at all, or do we need to do a complete overhaul?
I think the curriculum, there needs to be some improvement. But I think, as you say, artificial intelligence, Nigerians are opening up to it. So we're learning more market-relevant skills that we need to do better. There are a lot of skills which Nigerians need to learn. Trading, marketing, and tech-related skills. And this is going to help put more money in the pockets of Nigerians.
Right. So we keep talking about industrialization. You know, we need to get Africa more industrialized. We have a few countries in Africa that are managing, you know, to stay industrialized. But with an economy like Nigeria that's, you know, still struggling when it comes to industrialization, that means the economy is not creating jobs at this point. What would you like to see, you know, when it comes to government spending, you know, to help this economy actually, you know, create more jobs? What kind of policies would you like to see?
Well, to be very honest, I think the economy isn't doing so great at the moment. But I think the one thing about this economy is it's giving Nigerians and business people the opportunity to make money. If you notice, entrepreneurs are thriving in this economy. So I think the environment is somewhat enabling, but it needs to be more. Government needs to do more. They need to invite people. They need to send signals that say, hey, Nigeria is open for business. Come invest in Nigeria, you know, and this would help better things, create more. I don't believe it is the duty of government to create jobs. It's never been, it should never be. Government is very bad at running businesses, you understand? What they need to do is to create the enabling environment to assist businesses to come in and to flourish.
Right. And if we can get that enabling environment, because we've been talking about this enabling environment for the longest time, and we don't seem to have it yet. If we don't have the enabling environment, what else can the youth do at this point?
Well, I think the environment is better now. In the last 3 years, you've seen so many international businesses rushing to come into Nigeria. In fact, I was watching on TV the other day, and I see people talk, and they're like, oh, Nigeria is open for businesses, the oil sector everywhere, the signing of the PIA, you know, Nigeria is open. I don't think there's an option. We don't have an option to say, oh, if the environment is not enabling, what can we do? Government must make the environment enabling enough for investors and people to come in and to do business.
All right, so with this, you know, present administration, looking at the body language, looking at our political environment, what do you see in the next 10 years when it comes to the youths of Nigeria?
Nigeria is a very political country, too political, if I may say. 10 years from now, what I hope for, I hope to see a youth that is not only educated, but empowered economically. I hope to see a youth that is well informed, that is not only building, contributing to the economy of this country, but building businesses around the world, shaping policy. That is my hope for 10 years. And I do not think it's far-fetched. I think Nigeria is in the right track.
Right. And when it comes to empowerment programs, we keep hearing about different empowerment programs for youths, for women, you know, for disabled and all of that. Do we need to change the tactic when it comes to empowering?
Yes, we do. We definitely do. First things first, people need to stop seeing empowerment as sort of a giveaway, but investing in the future of this country. We have one way we're currently doing at the Project New Nigeria, and then we have a partnership with the Niger Delta Development Commission. That should be an example for everyone, because we and our partners, we are committed to education and empowerment of the people of the Niger Delta, and this is strategic for nation building. So, for example, we have students on scholarship, but we also empower them with digital tools, laptops, tablets, and this gives them access to they can learn, they can earn.
It seems like the same old empowerment routine.
Oh, no.
Laptops.
Well, I mean, you can see, I see where you're coming from. Yes, it's almost the same thing, but this is totally different, because there is no hidden agenda with this, and this is not a one-off. Across the Niger Delta, we are educating the youth first and first, while also empowering them and giving them access to these digital tools that can help them earn, to learn, and to make an income for themselves, be innovative, you know. So this is different. The difference is that we and our partners are committed and share a common vision, and there is no hidden agenda. So this is different from what has been going on before.
Empowerment with no hidden agenda. We'd love to see that continue in Nigeria. Thank you so much. It was great having you. Samuel Kelly Nzide is the convener, Project New Nigeria. Thank you so much for coming on, and we hope for the very best for Nigerian youth. All right, we'll take a break now. When we come back, we'll head straight to the global economy, see what's playing out there. That's the moment. Just stay with us. All right, let's find out what's happening in the global economy. We have Mr. Anete Edet right here to give us the details. Great to have you, Anete. Big story yesterday, Apple. I know you're an Apple fan. New CEO named at this point. How are you seeing that?
Well, of course, that's, as a matter of fact, it came in as a very, very big surprise because Tim Cook has been there for about 15 years. And, of course, Tim Cook took over when, after Steve Jobs, one of the key founders of Apple, which was founded about some 50 years ago, almost 50 years ago. So now that's news. I was expecting that Apple's share price would maybe be a little bit.
Just a bit.
Definitely will react.
Yes,
maybe on a high or on a low.
Yeah, I did see a pullback, but it's interesting to note that in the years that Tim Cook was in charge, the Apple stock has surged 1,900%, about that level. So
and not to mention also the innovations for Apple, which next year is expected to release.
Right.
Well, this year they will be releasing, but next year will be 20 years of the iPhone, so we keep eyes on that, especially as they have a new
Fantastic.
CEO. All right. So now, let's find out what's going on around the global economy and businesses. And we're starting first with the European stock markets. They've opened higher today. And this is coming as the deadline for the US and Iran, that ceasefire, which was earlier and supposed to have expired today. But US President Donald Trump, in his usual tradition, has extended it further by 24 hours to tomorrow. So that's going to be about some 12 a.m. tomorrow. So we'll be expecting the markets to continue to react. But so far, the European stocks 600, that's a broad indicator for many of the European bourses there. It was up by just a tad, 0.1%, while majority of the European stock markets, that's the DAX, the CAC in France, and the UK's FTSE 100 were also in positive territory. But overnight in the US, we saw that the US stock futures, it inched higher, but that's earlier today. And this is after the NASDAQ Composite snapped a 13-day win streak during the regular session. But for an overview of how Wall Street ended for Monday, we have our Washington correspondent, Maribel, to give us that details.
The U.S. stock markets humbled on Monday after what was considered a chaotic weekend as the U.S. Navy seized an Iranian ship. This has had an impact on the confidence by investors in the U.S. stock market. Specifically, the Dow Jones saw a falling of 0.1%, while the S&P 500 shed 0.2%, and the heavy tech NASDAQ took the largest leap of the day down at 0.3%, as many investors were a bit unclear as to the status and what would be next with the U.S. geopolitical conflict, as it's clear this has had an impact on the U.S. stock market, and we will see how the rest of the week responds.
That was our Washington correspondent, Mario Bird, giving us an overview of U.S. Stock markets closed for Monday. So from U.S., let's talk about the U.K., where we see that earlier today, or sometime yesterday, the UK's unemployment rate, it fell surprisingly to about 4.9%. That's for the month of February. And that's against the previous figure of about 5.2%, which was recorded in the month of January. So this is coming out in the midst of the conflict going on between the US and Iran as regards energy prices. So energy shocks is also expected to cause a rise in job cuts. So what we're seeing right now will be maybe just maybe a fragment of what is to come in the coming days, as well as within the quarter, because we're in the second quarter, and that war, of course, started sometime towards the tail end of the first quarter. But lo and behold, we're in the second quarter, so we'll be keeping eyes out for that. And of course, we'll be having our London correspondent Juliana Olayinka to give us details about that if we're able to get to Juliana. And still with the UK, we also see that there's an expected tube strike. That's for underground services. This is expected to face some disruption in the very first 24 hours. That is expected to begin by midday. So we'll be expecting that major travel disruptions caused by tube workers will be going on today, and members of the Rail, Maritime and Transport Union, that's the RMT, which represents roughly half of the drivers on the tube networks, are striking over a Transport for London's TfL voluntary proposal to allow train operators to move to a compressed 4-day week. So that's as regards the UK economy and what's going on within that that space of the world. Now, okay. So now we have our London correspondent Juliana to give us details about that, as well as some other many other issues as regards both the economy as well as the politics. But starting first with the UK's unemployment rate. Thank you for joining us, Juliana.
Hi, Anyate. Sorry you were unable to connect with me earlier.
Okay, so now we have about 3 areas to focus right now within the UK, but I'm starting off first with the unemployment rate. That's the labour market report, which came out just yesterday. So now, what is the reaction to the current surprise drop in the unemployment rate, which is currently at about 4.9% for the month of February?
Well, I think this gives the embattled Chancellor of the Exchequer, Rachel Reeves, a little bit of respite in what has been a really difficult 18 months for her. As you said, the Office for National Statistics have released labour market data surprisingly showing that the unemployment rate fell to 4.9% from 5.2% in the 3 months to February 2026. Now, as you quite rightly pointed out in your intro there, I think we have to be cautiously optimistic with this data because, of course, we're looking in the rearview mirror. The ONS figures only cover up to February, which is before the US-Israel-Iran conflict escalated, and also before oil and gas prices surged globally, which has had an acute reaction to markets in the UK because, of course, we're so energy dependent on places outside these shores. But nevertheless, this is still significantly important data, and it does show that unemployment, I think this is the best unemployment figures we've had since the summer last year. Parallel to that data, we've also seen UK GDP growth coming in much stronger in February. I think it grew by about 0.5%. Now, there is more detail to the story. Vacancies have dropped by over 700,000, which is close to a 5-year low. And HMRC have also shown that the numbers of payrolled employees has fallen 11,000. So wage growth is slowing. Hiring is also slowing down, but there are some positives in the headlines, but we're yet to see the full impact on the data from what's happening in the Middle East.
Okay, so Juliana, I know that we're pressed for time because we just have to run very soon, but just a very quick question now. Now, the tube workers in London are expected to begin a strike due to some issues there. Now, can you give us more details about the reason for that strike and how it's expected to affect major parts of London?
Yes, basically, this is the RMT union, which represents about roughly half of London Underground drivers. They are embarking on a 24-hour strike, which is about to start in about an hour. And again, this is because they want a 32-hour, 4-day work week for the same salary. And they're also joining cohorts with another major union, ASLEF, who are basically proposing the same thing. They've been arguing with the government now for several years, and it's come to a head. And obviously, London commuters they are facing the consequences of that today. So there are going to be major disruptions around central London, not just today, I believe Thursday and Friday too.
Okay, Juliana, so we'll leave it there, and we'll look out for how that turns out in about 2 hours from now, Nigerian time. Thank you so much for your time on the show.
Thank you very much.
Okay, that's Global News for Tuesday, and we'll get to see you another time to do this again, same time tomorrow.
All right, thank you, Anita. A quick view now of what the market is saying. NGX, we see that's near flat. That's for the all-share index. Stocks getting attention. Access Holdings, Fidelity Bank, FCMB. We're seeing gold still under pressure. That's a safe haven trade. For stocks, Europe in the green, Asia mostly green, and Bitcoin also in the green. I'll see you at 1:30, and we'll be back with market details later on. Thanks for watching Business Morning. I'm Ladi Williams. Bye for now.